Hello traders, it's Sunday, May 21st. We're about 6 hours before the open of the Chinese market. I don't know where the market's going to open tomorrow morning. Doesn't really matter. We're going to take a look at the market in just a second, but we start each one of these videos off with a review of the prior two picks. Then we do our market analysis. And then finally, I'm going to find a couple of really nice stocks that set up well for this week. One will be a long and one will be a short. AAP was one of the stocks that I selected in the last video that came out on Wednesday. Let's take a look at that one. That was a short, and you can see this is the price action Wednesday. You can see the stock rallied up, but then eventually gave back the gains. The market had been relatively strong this week, so the stock had to fight that. I still like this short. I like this upward sloping low plus trend line that's been breached to the downside. And you can see how after that attempt at a rally, it broke down. And the market also attempted to break out to a new relative high through horizontal resistance. So we'll take a look at that in just a second. I still like AAP. And most stocks right now, they'll make an initial move, and because they don't have a market tailwind, they'll stall out for a few days, and then you'll start to see some follow through in the direction of that trend. So some of the trades that I'm going to be showing you, they're going to take a few days to kind of digest losses or gains, whichever the case might be, and then you're going to start seeing some movement in that direction. So keep them on your radar. APP was a long that I had highlighted, and this is a good example where you have this initial move higher, some congestion, some digestion of gains, if you will, but buyers have proved that they still want to be in the stock. How can I say that? Well, if the stock had rallied up and there were natural profit takers, wham, 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 wham. They're taking profits, and that bid would be relatively soft, and you'd see that gap close right away. When that profit taking runs its course and buyers have proven that they're still there, you get a compression like this and then another leg higher. So you can see this is where the video came out Wednesday before the open. And yes, the stock has been able to move higher. I still like APP on the long side. Let's zoom out a little bit. We had some major trend line breaches right in here. The stock has had a nice basing period where it has a higher low double bottom, and it is through this horizontal resistance and through the major moving averages. So I like this stock. You can see the relative strength and the heavy volume. I think it's going to continue to perform. So let's take a look at the market, and you can see how this week we had this breakout here through the 417.50 level on the SPY. Very nice showing on Thursday. We also had decent volume on Thursday, so that raised an eyebrow. Could it have been 0 DTE options that pushed the market higher? Possibly. We're seeing a lot of action in those options. The gains were given back a little bit on Friday, and we closed off the high and we're resting right at that breakout. Ultimately, bulls want this breakout to hold. And if it holds for the course of the next week or more, then it legitimizes this breakout. Now, all of a sudden, we have to start shifting our market bias. My market bias has been neutral to slightly bearish. Slightly bearish simply because of all the credit issues that we're seeing on the regional bank level and the fact that the Fed remains very, very hawkish. We haven't seen any reprieve in inflation, and there's a 38% chance that the Fed is going to hike interest rates in June. Well, the market is pricing in a rate cut in Q4. That's not going to happen as far as the Fed is concerned. They're saying do not expect any rate cuts this year. The economy has been pretty stable. We're still seeing good job growth. So that's what has buyers engaged. And the initial jobless claims numbers each week have been decent. So I don't see any kinks in the armor there as far as the jobs starting to fall off or unemployment starting to worsen. And so that's keeping the bulls engaged. We also haven't seen any new banking issues. That also is emboldening buyers. The other issue that we have with the market rally is that it is very narrowly defined. There are less than a dozen stocks in the S&P 500 that have accounted for all of the gains this year. So the other 490 stocks are flat to lower. So not a lot of breadth. We're not seeing a lot of participation across all of the different companies. And that has to bring into question how legitimate this rally is because it's taken place on fairly light volume. So as we look at the week ahead, the news that's going to be coming out, earnings season is for all intents and purposes over. It was decent. It was better than expected. The expectations, though, had been lowered. Stocks are trading at a forward PE of 18 on the S&P 500 by historical measures. That is relatively rich. So asset managers are not gung ho. I got to be in the market right now. Not at those valuations. Companies need another quarter or two to grow into those valuations, and that time is also going to help us identify whether or not the economy is going to have a soft landing. Are we going to go into a recession? Are there more banking issues? So I believe that time is the missing element and that we're going to continue to just move sideways until we have that information. As far as information this week, we'll have the FOMC minutes released on Wednesday. So the market is probably going to be in wait and see mode again for that. On Tuesday, the action should die down. Wednesday will be pretty quiet as well. We've got a holiday coming up, so we have Memorial Day coming up. Pre-holiday, the volume tends to dry up as well. And the FOMC minutes are not a huge market catalyst because the Fed has been so dang vocal since the last FOMC statement. There have been, I think, about 30 different press conferences that have been held by various Fed officials. So there shouldn't really be any secrets. There also is not a lot of new data that's come out since the last FOMC statement. Inflation has been running a little bit hot. It came in at 4.9%. That is way higher than the 2% target that the Fed has. Now, this week we're going to get another look at GDP. This is the second look, and the PCE deflator is going to come out, but most of that shock came out a month ago when we had our first look at Q1 GDP. So this week is not going to really hold a lot of material news that could possibly drive the market. Plus, we've got a holiday coming up, so the volume should be reduced. I'm looking for relatively tight trading ranges. I'm looking for us to maybe drift back below this horizontal was resistance, now support, get below that 417 level, and spend more time in this trading range until we get the next jobs report, until we get the next material news event. And that means that you've got to keep your trading fairly light because we're in a low probability trading environment. That's why we're sticking to day trading. We're trying to find stocks that are moving on their own. They have their own news, they have their own momentum. To a degree, they are oblivious to what the market is doing. And right now, we don't have to worry too much about the market rug getting pulled out from under us because the average true range has been declining. We're seeing fairly tight trading ranges. Some days we have decent volume. When we have decent volume, we could be a little bit more aggressive. When we don't have the volume and we're trapped inside the prior day's range, that's when we have to be very, very careful with our stock selection. And we have to make sure that the stock is breaking out on a D1 basis and that it has heavy volume on an M5 basis. Without those two critical components, the stock is not going to be able to mount a sustained move. So let's take a look at some searches. Let's see what we can find as far as possible stocks that are setting up for next week. I'm going to start on the bullish side. So we're going to go into one of our searches and I'm going to look out for breakouts specifically through trend lines. So I'm looking for breakout times 2. Now, ideally, as I look for these stocks, I'm not too interested in stocks that are making a new 52-week high? Can they continue to go higher? Yes, they can. The issue is that if they've already run up 20, 30%, how much more gas do they have left in the tank? I would prefer to find stocks that have been relatively dormant and that are now breaking through technical resistance. So let's see what the breakout times 2 search has. AVGO is at the top of the list. This stock has made a big run from the $410 level to almost $700. So that is a substantial move of somewhere in the neighborhood of 50%. Big, big move. I'm not that interested in buying this breakout, but we'll zoom out once more. And there you've got some horizontal resistance right at this level as well. So that would keep me from putting it on the long list. Could this breakout continue to go? I guess it's a tech stock and it's run all the way from this level to this level. That tells me that it's probably out of gas, at least for right now. So we'll go to the second stock on the list, EXAS. I like this. I like this stock because it's had a longer term compression right here. You can see that it had a beautiful breakout through multiple trend lines. We had some high minus trend lines. This I view as a very important, very relevant trend line that comes in here because it's a longer term trend line. And we're starting to get through these high plus trend lines. We have relative strength and we have heavy volume. I believe that this stock is going to continue to go. We do have another trend line that it has to get through right around that $85 level, but I believe it's going to be able to do that. So let's take a look at, first let's zoom out a little bit so we can get a little bit different perspective on it. And there you can see the compression. We could put up one OSI. You're going to see the yellow dots, excuse me, we're going to put up the 1.0 squeeze indicator, and there you can see these yellow dots are a sign that the stock is compressing. So typically, the longer and tighter the compression, the bigger and more sustained the breakout is going to be. Because in here, we had buyers and sellers paired off. There's earnings after the close. Aha! We have some new information. That new information has gotten us out of this equilibrium, and now traders are having to adjust. As I mentioned earlier, if there were a lot of profit takers after the stock has been dormant for this amount of time, they'd be happy to take some gains. You would see the stock blam, 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 fill in that gap. Didn't happen. Buyers are interested in the news that came out. They are the aggressors, and that's why you didn't see this gap filled. So we digest gains for about a week or so, and now tick, 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 we're moving higher. EXAS. I also mentioned earlier that because the market's not going anywhere, the stock is going to have to do all the heavy lifting on its own. So it might take a day or two or three for this stock to really get its sea legs, but it looks to me like it wants to continue to move higher. We'll take a look at a couple of other picks, but EXAS, that sets up really well. Here we have ISRG. We can zoom out a little bit to see if that's a new relative high. It is, and it's gotten through this horizontal resistance. Yeah, it looks like a pretty decent stock. ACAD, I like this one too. This one got my attention. By the way, these are the automated trend lines that are drawn by Option Stalker Pro. This is a feature that we released a couple of months ago. Really, really nice feature because at a glance, you can see where these support and resistance levels come into play. Now, these are the most current trend lines that are in play. Some of them have been breached. Some of them have not been breached, but they are within range so that we can plan our trading. I like ACAD. You can see this nice basing pattern in here. We have a higher low double bottom. Now we're continuing to make higher lows. We're above all the major moving averages. We've got decent volume. We have relative strength. The stock still has plenty of room to go up to this 25.50 level or so. I like ACAD. That can certainly be another alternative for you to consider. Let's take a look at that 5-minute chart, see what it did. So you can see Thursday, I know this because I was watching the market lift off and get through horizontal resistance. Thursday was a particularly strong day in the market. And look, the stock participated in the rally. And then Friday, big gap up, even though the market retraced. Let's take a look at that price action. This is the SPY, opening gap higher, trying to add to those gains. No, there's some profit taking that comes in. So when the market was selling off, this stock was really starting to rally and it broke out through that resistance level. So yes, I like it. Let's take a look at what EXAS did. And you can see when the market was pulling back, it had a gradual tick, tick, tick higher. You'll also notice that this stock is fairly choppy. So it makes a rally and then a pullback, a rally and then a pullback. So you do not want to be buying these peaks in here. You want to be waiting for these dips. And this one is more of a grinder. ACAD, that one has a little bit more momentum right now. And you can see that the pullbacks are shallower and that it's able to get through those highs. Maybe I'm going to change my mind here. I think I'm going to go with ACAD as my pick of the day. I really like this price action, and it's a little bit more consistent than EXAS because the pullbacks are smaller in nature, and then the stock gets right back on track. So, but again, you do not have to buy a new high of the day. Wait for that pullback, be bidding, and then you can take your profits. Be bidding, and then you can take your profits. So that's how I would play this stock. Now let's take a look at some bearish picks, and I'm going to go into some of these and take a quick look down the list. There's one stock in particular that I noticed last week, and I'm trying to see it on the list here. I can go through a few. SPWR is one that we traded on Friday very successfully. That was steady selling pressure. Let's take a look at that daily chart. Big breakdown through these trend lines. Once it got through, it picked up a lot of steam. Just going to take a look. CROX is the stock that I was looking for. I like this pattern here because this is typical of a buying climax. So you can see how the stock has really run up hard. Foot Locker released its earnings last week. It got pounded hard. So a lot of the shoemakers, Skechers, Nike were also down in sympathy. But even before that, you can see that Crocs had made a really big run up from roughly about, let's take a look at that price level. So we've got a low right in there of $46 all the way up to $150 in a short amount of time. That stock is up 200%. Well, you can see it's a mover once it starts a trend. This is a significant trend line and a significant trend line breach. And if you drew a trend line from here to here, you would have another breach. We've chosen to draw it like that, longer time frame. Here are a couple of low minus trend lines that also come into play. This stock is starting to get through this horizontal support. It has an easy path down to the 200-day moving average, which is 102. And if it gets through that 200-day moving average, it should be able to get down to this 97.50 level pretty dang easily. It just needs a little help from the market. So now we've got a failed breakout because this is a horizontal resistance level right in here. We've also got a bullish flag formation right in here that we've broken down through. If you extend that trend line, we also have an upward sloping trend line here that was breached on the downside. There is your earnings reaction. So it released before the open off of a relative high. Blam! The stock really got blasted hard, dropped it through the 100-day moving average at a time when the market has been trying to rally and breaking through technical resistance. What did this stock do? If this was an overreaction to that earnings report, you would have seen with a strong market, boom, 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 boom. and a march right up with the market. So remember, this is what the market's been doing over the course of the last few days. Higher, 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 high. Well, it pulled back a little bit, but you can see it's made decent gains over the last 4 days, and it has gotten through this technical resistance level. What did the stock do? Couldn't get through the 100-day moving average. Sell, 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 sell. We don't care about the market. We want to take profits on Crocs because of their last earnings report, and we see weakness in the shoe group. So they're getting out. I like this stock. I think it's going to move lower. It just needs a little help from the market. And there you can see that the stock sold off, closed near its low on Friday. So again, in the back of your mind, when you're day trading, you should always kind of be aware of what the market has been doing the last week, the last few days. And so when you're flipping charts, I do this subconsciously. I'll look at a chart like this and I'll go, oh, that's a nice sell off. Oh, hey, the market I know on Thursday was boom, 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 getting through technical resistance on heavy volume. What was this stock doing? Sell off hard. Ooh, that's a pretty big disconnect. This tells me this is like a buying climax in here. This stock is selling off. I can also put up the SPY overlay, gray line, and you'll see exactly what I'm talking about. So here you've got the market rally on Thursday. Look at the market march higher. Look at this stock. It can't get off the deck. So even though the market's moving higher, even though there should be buying in Crocs, there's not, because any of that buying is offset by sellers. And that tells us that the sellers are in control of this stock. So you get a market rally on Friday. What happens to the stock? These sellers in here, blam, they do not care. They want to unload some shares while the going is good. These are the tells that we're looking for. Crocs is your short for the first part of the week. I'll do another video before the FOMC minutes on Wednesday. That'll give us a chance to look at some stocks that still might be performing. I'm not expecting a big reaction off the FOMC. Thursday and Friday pre-holiday, they're going to be dead. I really don't think the GDP is going to have much of an impact. I don't think the PCE deflator is going to have much of an impact. Even the FOMC minutes is going to be a hurry up and wait type of situation where the volume dies off, then we wait for the minutes, and they don't really produce much of a reaction. So the market's not going to do a whole lot. I'm looking for it to stay relatively flat. There's no catalyst to really push it higher. Ideally, it comes in just a little bit and finishes somewhere below this long green candle and gets back inside the range. And then we just start to see a little bit more of that sideways price action. Thanks so much for watching, everyone. Good luck with your trading. I'll be doing a video sometime Wednesday morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.